This is the Rich Dad Radio Show, the good news and bad news about money. Here's Robert Kiyosaki.
Hello. This is Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And every time you hear that little song come on, you know we have a person who can see clearly. And we're going to be discussing what's going on in the future. Are we heading for a recession? Are we heading for depression? Or are we heading for the biggest boom in world history? You know, right now, I personally have never seen such turmoil in the world, and I'm more on the stand-aside, category, just watching what's happening rather than not making a move. So our guest today is a very, very prominent person. When he speaks, everybody listens to him. And I'm very honored to have our guest today, Mohamed El-Erian. And like I said, when he speaks, I listen. But the other thing about Mohamed is he might be the last optimist standing. And everybody's crying doom and gloom. And I heard him saying, he said, look, that's why there's doom and gloom, because everybody's saying it's doom and gloom. But you said there's something else going on. Any comments, Kim?
Well, Mohamed El-Erian he's the Chief Economic Advisor at Allianz and the former CEO and Co-Chief Investment Officer of PIMCO, and was recently named President of Queen's College at the University of Cambridge in England because he sees a need for change in education, which is right up our alley. So a lot of people have their opinions of what's going on, but Mohamed is going to give you the facts and different ways of looking at the economy and the markets. So, Mohamed, welcome to the program. So excited to have you here.
I'm delighted. Thank you so much for having me on.
Thank you.
Well, let's jump right in. I've already, for those listening, I've already asked Mohamed to keep it simple for my level of intellect here. The simpler, the better for me. But it's the relation. Let's get back to you were with PIMCO, which is a bond funding company. And then there's a stock market and there's real estate market and things like this. So what is the relationship between bonds, which is possibly the biggest market in the world, much bigger than the stock market? But how do bonds affect the world versus stocks? Could you really keep it really simple?
So an easy way to think about this is from a company's perspective. If you're a company and you want to fund yourself, you basically have two choices. One is to issue stock, and that means you give ownership in the company to your shareholders. So on the other side is a shareholder that buys a stock, and they have voting rights, and they share the upside and the downside of what the company does.
Okay.
Another way of funding yourself, and they do both, is to issue a bond. A bond is very different. What a bond says is that I have a contractual arrangement to pay you every year, you the bondholder, a certain interest rate. The best you can do is get your money back, and the worst you can do is lose all your money. So you don't have any more upside than getting your money back if you're a long-term holder and getting paid interest. So you may ask me, well, that's a bad deal. You have capped upside and complete downside. I tell you, well, there's one difference. Bondholders get first claim on the company, so they get seniority.
So they're ahead of the stockholder.
They're ahead of the stockholder,
right.
Absolutely. So what you get is called the capital structure. At the top of the capital structure are the bondholders, at the bottom are the equity holders, and that allows a company to fund itself more flexibly than it would if it was depending on just one type of instrument. So that's the fundamental difference. They are a claim on future resources, but in a different way with different upside, downside.
So it's simple to say that a bond is debt and stocks are equity?
Correct.
Very simple terms. So, and is it your experience or your reality that the bond market is bigger than the stock market or deeper in the U.S. at least?
Yeah, most people that tell you there's two fundamental differences between the two. One is size, and the other one is what they tell you. So the bond market in general, and remember, it's not just companies that issue bonds, but it's also governments that issue bonds, sovereign debt, as it's called. The bond market tends to take a view of overall conditions. and is impacted less by the day-to-day developments. So when people want to look for big signals, they go to the bond market. The equity market is regarded as being very, very focused on smaller things. So the information content that comes from the two is different. And there are times when there seemingly are competing or conflicting signals that come from both markets.
And Mohamed, what kind of signals happen in the bond market that we'd want to pay attention to?
So if, for example, the long-term interest rates comes down radically.
How long is long-term in your world?
Anything from 10 years onwards.
Okay.
So if the 10-year Treasury rate, which has happened here, we can talk about what's happening today, comes down sharply, then that has tended to be a signal of a significant economic slowdown. Why? Because people who are willing to commit their money for a long time are also willing to get paid less. Now, why would you want to get paid less? Because you think that interest rates will actually come down. So the market has tended to use the long-term interest rate structure to signal economic developments. Alternatively, if it spikes up, so people are wondering, why am I paying so much more on my mortgages suddenly? Or why am I paying less on my mortgages? Well, guess what? The market is trying to assess what the outlook is going to look like.
So let me ask this. So let's say the 10-year, this is what just happened. There was a bond yield inversion, and everybody started screaming, the sky is falling, the sky is falling. And I saw you on, I think it was CNBC, and you were saying that's not what it really means. So you interpreted it one way and another thing. So would you mind explaining the traditional, what does a bond yield inversion mean to a layperson like Kim and I?
So what it means is that you get paid more for holding short maturity bonds, call it a 2-year bond, then you get paid for holding a 10-year bond.
So can we use some simple terms? So let's say 10 years is 5%. And
right,
then,
and you would get paid. So let's take an example. Let's take a very simple example today. If you commit your money for 3 months, you'll get paid around 2.2%.
Okay.
If you commit your money for 10 years, you'll get paid only 2%. Now, someone will look at that and say, hey, wait a minute, I don't get that.
That's kind of opposite of what people are looking for typically, right?
Correct. If you're asking me to lock up my money and take longer-term risk, why would I get paid less?
So in the old economy, or what happened before, the 10-year, if the short term was going 2%, and the long term should have been maybe 6%, that would be this is good, this is healthy. Because this
is healthy because it shows the economy is going to grow, and it shows that you're going to get paid more for committing money longer.
So you can tie up your money for 10 years.
Correct. When you get the inversion, it signals that the market expects a major slowdown. And typically, in the past, they've been pretty good, not completely reliable, but pretty good predictors of what's coming ahead.
So why would...
This time around...
Go
ahead.
Let me ask you this. So suddenly everybody sees that instead of being, let's say, simple terms, 10 years at 5%, the short term is at 2%, but suddenly the long term goes from 5% to 1%, let's say. What everybody is saying is what? What does that mean to people given an inversion?
They say it's either going to be an economic slowdown or a recession.
And you're saying not necessarily.
I'm not saying that not necessarily, because there's one other fact which I think will be stunning to most people listening to this conversation. Today, there is 14 trillion, which is a very large amount, dollars of bonds trading at negative yield. What does that mean? It means that are people willing or have to give their money, and instead of getting paid interest, they have to pay for the privilege of committing their money.
$14 trillion worth?
Upside down.
$14 trillion
worth.
So the price of money has gone upside down.
Correct.
So if you're a saver, you have to pay money to have somebody hold your money for you.
Correct. And if in Europe, for example, some companies have to pay the bank to have a deposit there.
That's
so
right.
forget about getting paid interest on your deposit. You have to pay the bank for holding the deposit. Now, that is not in any single economic textbook. And it shows you how distorted the financial system has become. And if you want to understand how we've ended up in this position, it has to do with the burden that's been placed on central banks. And they have gone, quote, unconventional. And part of the unconventional policies in Europe has been negative interest rates. So the markets right now, the bond markets are very distorted by the fact that we have one major central bank, the European Central Bank, that has a negative policy rate. And that has distorted the signals that are coming out of the bond market.
So given a man of your educational background, plus years and years of experience, plus being a global viewer, person who watches the world, what does that, when you say, okay, the central bank is now charging people to keep their money, whatever it is, what does that mean to you in greater depth or simplicity? So it means something more to you than most people would.
It means that we live in a very unbalanced world. So why would a central bank feel compelled to do something so unconventional? And some would tell you, by the way, something that is actually harmful over the long term. And we can come back to that. It is because other policymakers are not stepping up to their responsibility.
Like who?
So if you look at Europe, which is having a significant problem generating high economic growth, it has a series of problems that are nowhere near the central bank. The central bank cannot address the following. First, the lack of incentives for economic growth. Europe has been left with a number of structural impediments. Think of someone coming out of hospital who still has structural problems. They can walk, but they cannot run. And Europe has a number of structural impediments to be able to run. Therefore, the best it can do is just walk. Secondly, high debt. There are countries like Italy with enormous debt problems. Thirdly, where the money is where people don't want to spend, and where there's no money, people want to spend. So Germany has a huge fiscal surplus, but they don't want to spend it. And other countries in Europe have a deficit and want to spend more. So you have a mismatch between the willingness and the ability to spend. All these things are holding back growth. And the central bank is the only, quote, game in town when it comes to trying to promote economic growth, but that has forced it to do more and more unconventional things.
And that's the title of your book, The Only Game in Town, Central Bank's Instability and Avoiding the Next Collapse, came out in 2016. So one more trivial question. The central banks are monetary policy, and governments like Germany and the U.S., their fiscal policies? Is that how you guys speak?
Correct, yes.
So monetary policy is trying to prop up the fiscal policy, which means why you're saying some people are not stepping up?
Yeah, so I think of it as if I have a problem, okay, a health problem. I come to you. You are a doctor but not a surgeon, and you tell me, you know what, Mohammed, you really need surgery. But the surgeons aren't turning up these days. So I'm going to give you a painkiller that's going to make the pain go away, but it's not going to fundamentally fix your problem. And I say, well, thank you, doctor. Hopefully tomorrow the surgeons will come to work. I come back tomorrow and the surgeons haven't come back to work. And then you as a doctor tell me, well, I'm going to give you double the dose. And what we get into is this dynamic where we don't fix what's really wrong with me, but you give me more and more painkillers. And at some point, you and I will start worrying about the side effects of me taking so many painkillers. And I think that's where we are today in the global economy.
Okay, so if you were Angela Merkel, how would you fix it?
Yep.
What would you do that she's not doing?
So Angela Merkel is in a particularly tough situation because Germany doesn't want to take a regional leadership role. There's a lot of historical reasons that make Germany very hesitant to be viewed as imposing its will around Europe.
So they're becoming more centralized or nationalized.
Yeah, and everybody has become more nationalized, because when you have a problem, you tend to look inwardly and blame the others outside. So that we've seen that in terms of the nationalism that has happened. Basically, the solutions to Europe are well known. First and foremost, it is governments seriously implementing what are called structural reforms. But remember, like any surgery, the pain is up front and the benefits are down the road. So governments are very hesitant to implement structural reforms because they may not be voted back in when they do so. But the first thing is you need structural reforms. The second is you need more fiscal spending on the part of countries that don't like to spend.
Got it.
The third...
Oh, good. Excuse me.
Go ahead. And the third and the hardest is there are certain countries like Greece that simply have too much debt. And the right thing to do is to forgive that debt. But no one likes forgiving debt. Forgiving debt is viewed as rewarding those who have misbehaved. It's viewed as having the wrong incentive signals. But there comes a time when, at the end of the day, it's the best of bad options. So when you look at these three things, the engineers have agreed on what to do, but it is politically very hard to do, and that's why Europe is stuck in this low-growth world.
And I think that is a fundamental problem. What you're saying, Mohamed, is that you've got politicians and people in power, and the what needs to happen is long-term fixes, but they don't want to do the long-term fixes because it's going to affect them personally, and they don't get elected, and they don't get the power, and they don't get all of that. So they look very short-term, not the long-term structural fixes that you think need to be happening.
That's absolutely right.
So let me ask you this, Mohamed. How can you be the last optimist standing? I mean, every time I listen to you, I go, holy moly, we have a yield curve inversion. So, that's no big deal, like that going. And then I look outside, but the United States is pretty strong right now, lowest unemployment ever and things like this. So is it possible the rest of the world can go to hell and America can stay strong?
It is possible, but it's far from automatic. It's possible because we are a big economy. We're an entrepreneurial economy, and we're relatively close. We don't depend on the rest of the world as much as others do. But remember, it is very, very hard to be a good house in a lousy neighborhood. You can, but it's really, really hard. At some point, the neighborhood starts influencing the house and the value of the house. So we can do it, but I think a better way of thinking about it is that we need to help others come up to our level. We need to take more of a leadership role, and we can and we should do so.
Thank you very much. When we come back, we'll be talking more to Mohamed about how he can be the last optimist standing, but more what could be done. But I think more importantly, we'll get to what the individual can do. Because as you know, for those who follow, Rich Dad is primarily educational, so we make no recommendations on any investment. But you have to be both a pessimist as well as an optimist. Where's the brightness in all this? So when we come back, we'll find out how Mohamed can see the brightness in spite of all what most people would say is doom and gloom, and how can the American economy keep booming while everybody else is kind of hurting. So when we come back, we'll be in the second part of the program with Mohamed El-Erian, one of the smartest minds. Like I said, when Mohamed talks, the world listens. We'll be right back. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And that song is dedicated to all those who want to see a brighter day coming up. And you can listen to the Rich Dad Radio Show anytime, anywhere on iTunes or Android, and all of our programs are archived at richdadradio.com. We archive it for one reason. It's because repetition is how we learn. So if you listen to this program one more time, you'll pick up 70% more than you missed it the first time. But most importantly, you can listen to this program and share it with your friends, family, and business associates and discuss it. If and when you do that, you'll find your intelligence skyrockets because you've actually discussed it with people that are closest to you, and they're the most important people in your world today. So our special guest today is Mohamed El-Erian. I mean, he is, like I say, when he speaks, everybody listens. And I've been kidding him, saying he's the last standing optimist that I know of, because he's always on the program. I remember once, not too long ago, Mohamed says the reason the market will turn is because all of you say it's going to turn. And that's called the power of, the word becomes flesh. You say it's bad, so it gets bad. So anyway, Kim, any comments before
Well,
we go on?
our guest, Mohamed El-Erian, he's the Chief Economic Advisor at Allianz and former CEO and Co-Chief Investment Officer at PIMCO, which is one of the largest bond companies. He's also the author of The Only Game in Town, Central Bank's Instability and Avoiding the Next Collapse, and his other book is When Markets Collide, Investment Strategies for the Age of Global Economic Change.
So I've never seen, I mean, not that I'm not that old, but I've never seen anything this volatile.
That's crazy.
Yeah. I mean, look, I want to just jump real quick. We have this guy Trump, he's just crossed the border into North Korea and all the other things he's doing. He's talking to Xi and all this stuff. At the meantime, Hong Kong is rioting. What does that mean to you, Mohammed, since you watch the global world?
So I think what you're getting is pushback from people in Hong Kong to China imposing more and more of its will. For a long time, the mantra was two system, one country. So yes, Hong Kong is part of China, but explicitly there are two systems and we will tolerate two systems. And there's a lot of concerns now among some people in Hong Kong that this tolerance of the two system is eroding. I think for those of us on the outside, the main question is you get spilled back to other parts of China. China has been incredibly successful in implementing a social contract. Think of a social contract being a contract between the governed and those who are governing. And the social contract in simple terms basically says, I, the government of China, will deliver jobs, higher income, and prosperity to you, the people. But against that, you give up certain civil rights that other people have. And that social contract has held. And the question now is, will what's happening in Hong Kong erode the social contract back in China?
Will it
and
spread?
If it does, will it spread? Exactly. And if it does, and it's not clear that it will, but if it does, it would make China much harder to govern, which means that the second biggest economy in the world would become more volatile. And that's really what we should be watching going forward.
What do you think the odds are that the rioting in Hong Kong spreads? Because, with the new social media and internet, it's hard to keep that quiet.
Yes, so we had one episode like this a while ago, and it didn't spread. Robert, I don't have a good feel for it. This is way beyond my sort of. I don't have a good feel for China, for what goes on in China. But I do know, for the reason you just cited, of social media, etc., the risk is much higher than it would have been in the past. So to the extent that people say, well, we had Tiananmen Square 3 years ago, and that didn't spread, I'll say, well, be careful, because the world is different, and people, the way people consume information today is very different from what it was before.
Thank you. What concerns me is I'll be in China in a few months, and then it's going to be interesting what I have to say over there. Any comments, Kim?
Well, Mohammed, when we had you on the show last time, we were talking about Trump, President Trump, and you said he was on the right track with some of the things he was doing, specifically with China. Do you think that's still the case?
Yeah, I think that more and more people now, and you see this one issue that has a lot of people politically and otherwise on his side, which is let's stand up to China. In fact, I'll give you a very simple example. In his meeting at the G20, which is a summit of the 20 most influential countries in the world, President Trump met President Xi of China. And they agreed to a truce on their trade war. And part of that truce was President Trump allowing a Chinese company, Huawei, to receive suppliers from the United States. The reaction in the U.S. was, hey, what are you doing? So we've gone from people questioning Trump being too hard on China to people now questioning whether Trump should relax the restrictions that the U.S. has put on China. And that shows you a complete change in mindset in the United States to the realization that China is not just an economic competitor, it's also a national security competitor. And if you don't do something about it now, when will you do something about it? And I think that is really important to understand that is the change that's ongoing in the United States. And that's why this one issue has a lot of people from both parties behind it, even though we're living in a very polarized political world right now.
Which is what you say is economics versus politics. It's all one big mishmash right now.
Yeah,
They're
for
colliding.
a long time, it was about bad economics resulting in messy politics. And now we're seeing politics influence economics. So we're seeing the weaponization of economic tools. Tariffs have now been weaponized. We are seeing more and more nationalist policies. We are seeing a lot of changes that suggest that you get a feedback loop between economics and politics. And when you get these feedback loops, you know what happens? The unthinkable becomes thinkable. I remember when my daughter was a child and she would have a tantrum. We all think, sit it out and she will calm herself. But what if that tantrum makes her feel sick, and then she starts throwing up, and then she gets even more of a tantrum, and next thing you know, you're losing control of your child, right? And this is what's called self-fulfilling vicious cycles.
And that's what you were warning of, wasn't it, when I've seen you talk to people?
Yeah, I always tell people, we understand the dynamics of it. Not everything is like an elastic band that goes back. Not everything is mean reverting. And when you get economics and politics interacting with each other, then you really do get the potential for these self-fulfilling adverse dynamics.
So let me ask you this question. Of all the people in the world, how can you be the last optimist standing? What are you optimistic about? Because when I look at what's going on in Europe, in the Americas, and then Africa and Asia, how are you so optimistic? That's what I want to know.
Because none of this is God-given. We can change these things. It's about decisions, about political decisions. It's about leadership. And I think there comes a time when things get so bad that people have to focus on solutions as opposed to just complaining. And I think that it's not as if we don't have solutions. We have solutions. We just haven't had the political will to implement. And the fact that we have solutions is what makes me optimistic.
And so some of those solutions.
So, for example, in the United States, we all worry about being contaminated by the rest of the world. Mm-hmm. We all worry, to use what I used earlier, that it can be a good house in a bad neighborhood. That's absolutely true. So let's insulate the house. If you really want to improve our economy, let's step up investment on infrastructure. Because infrastructure has this wonderful thing of enabling more people to do more things. We have the ability to do that. It just takes political will to do so.
And leadership.
Right? And so I look around and I can see a set of policies on which most people agree on. I mean, that's the irony, is that most people agree on this would be a good idea. You just need the political will to implement it. And there comes a time when people say, you know what, let's work together. And I think we're getting closer to that point.
It's almost, you're saying it comes to a point where it gets so bad that people finally step up and say, hey, we got to do something. So we're not at the so bad point yet, or are we there now?
We're not here. In Europe, we're getting very close to the so bad point.
Okay.
So Europe for me is the main source of potential risk to the global economy.
And so let me ask you this. When you say self-fulfilling, does that also apply to the masses? Because I look at the media, and the media is always bad news, the economy's bad, people are going towards socialism. Is that part of the self-fulfilling? Can it be like a mass think that brings this about?
So what you're worried about is if I scare you, okay, if I really scare you about the future is dark, etc., what are you going to do? You're going to spend less. You're going to keep more money for that dark future. When you spend less, someone else gets paid less. When someone else gets paid less, they spend less. So next thing you know, we get ourselves in that vicious cycle where our fear of the future accelerates what we're afraid of.
Yeah.
Well,
And these are
Self-fulfilling, yes.
Yeah. Well, that's what Sir Isaac Newton said years and years ago, was it the South Sea Bubble, the Tulip Mania thing. He said, I can predict the motions of heavenly bodies, but I cannot predict the insanity of crowds. And
correct.
I think that's where a lot of time economists miss is how insane are the crowds going to be, if it goes worse.
And we have been very bad at understanding behaviors. We have been very bad at predicting how people will react. And that's because we haven't taken behavioral science seriously enough. We haven't understood that what may seem rational isn't that rational because we all have our biases. And I think that there's a much bigger effort going on now to understand behavioral science in order to be better at predicting how people will actually behave. Not what the textbook tells us, but how people will actually behave.
Okay. So before we close, and keeping in mind that we're a worldwide audience, what would you say is an important thing for individuals to people who are listening to this program, to do or think or look at the world?
Start with the uncomfortable notion that the future is less predictable, is more uncertain. And rather than let that paralyze you into doing nothing at all, embrace it. Embrace it. That's your reality. You're not going to change it. You're too small to change that reality, but embrace it. And then ask yourself, what are the 3 characteristics I need to navigate that world? 1 is resilience. I have to stay in the game. 2 is optionality. I have to be able to change my mind when I get more information as to what's actually happening on the ground. And 3 is agility. I have to be able to move quickly to reduce risk and take advantage of opportunities, because risk always comes with opportunities. So always ask yourself, do I have this combination of resilience? Do I have this combination of optionality? And do I have this combination of agility? If you have these 3 things, then you will navigate the world much better than others. And that translates into how we think about where we invest money, how much debt are we taking on, how big a mortgage should we take on, or how should we think about education for our kids. It has huge implication if you just boil it down to this notion of the trifecta of resilience, optionality, and agility.
So let me end with one last question. One last question. Historically, when the last was the 1930s and stuff like this, when the economy was in the toilet, that was the rise of popularism, or some people call it socialism, and that the government should give people money is called almost neo-Keynesian or modern market theory, modern money theory. Just give the people money. What do you think is going on with this socialism? I mean, I've never heard such unabashed socialist ideas, free this, free that, free this. At the same time, our debt is going through the roof. So when you see all that, speaking of human behavior, what do you see going on?
Yeah, I call it political anger. When the system is viewed not to have delivered, people will opt for alternatives. You saw this with the UK voting to exit the European Union. That was the politics of anger. You saw this with the emergence of more extreme political parties from left and the right in Europe. You saw this with the election of President Trump. Most people would have never predicted that. And what you get when the individual gets angry, they opt for a completely different solution. Because they are voting against something. And what we've seen is that the system has under-delivered for so many years in terms of growth. People think it's unfair that they get angry. And when they get angry, they vote for what they don't want. And you get these unusual outcomes. So whether it's the so-called socialism or nationalism, or you get that, these are just reaction to a system that hasn't produced, and the longer it takes for the system to produce, the more extreme these outcomes are going to become.
So that's why Sir Isaac Newton says, I can predict the motion of heavenly bodies, but I can't predict the outcome, what the crowds are going to do if it gets that bad.
Correct. if you become a single issue person, and we see this in our personal lives as well, if you become, instead of taking a holistic view of the whole thing, you become a single issue person, then you end up with a strange outcome. I'll give you a very simple personal example, if I may.
Please.
Sure, please.
My last year as an undergraduate, I had my whole plans as to what I was going to do my doctorate program. Then I fell in love with this amazing, and this woman was going to another university. So instead of continuing on my plan, I decided that the only issue that mattered in my life was this woman, because I was convinced that this would be the person for me. So during the summer, I scrambled and changed all my plans to go to this other university. And the only reason I chose it is because of her. Guess what happened the second day I was there? She dumped me.
Oh,
you know what?
Oh, that's
and
just
I found
mean.
myself committed to a 3-year course
Wow.
in a place I knew very little about.
Wow.
And
Great example.
that was for me, don't make decisions based on one factor alone, because you may end up in the wrong place. And for me, that was a very personal lesson about that. So when you become a single issue person, you may end up with outcomes that are not what you would have decided based on a more holistic thing. But you know what? There's reasons why we fall in love, we get angry, we get passionate, right? So understanding human behavior is very important in this regard.
And what you're saying too of political anger and single focus, we're really operating purely on emotions, and we're making emotional decisions, without really looking at all of the factors involved. Is that correct?
Correct. Absolutely correct.
And Mohamed, that's why we just love you having you on the program, because you come with such depth and insight that most people do not have. And I really appreciate you taking the time to be on Rich Dad Radio, because I learned so much from you, and the world learns a lot from you. And we need more
I'm
people
delighted.
like
Thank you so much for having me on.
Well,
thank you,
for sharing
Mohamed.
it,
Thank you
wisdom.
thank you for all your insights. So appreciate
Thank
it.
you. So when we come back, we've got the next most popular part of the program is Ask Robert, but after listening to Mohamed, you may not want to ask many more questions. We'll be right back. Welcome back. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Once again, you can listen to the Rich Dad Radio program anytime, anywhere, on iTunes or Android, and we archive all of our programs at richdadradio.com so you can listen to this program again. If you listen to this program again and discuss it with friends, family, and business associates, your intelligence will skyrocket. So anyway, I want to thank Mohamed El-Erian, and you can submit your questions now to AskRobert@richdadradio.com. What's the first question, Melissa?
Our first question today comes from Ken in Richmond, Virginia. Favorite book, Rich Dad, Poor Dad. He says, "Hi, Robert. I am currently reading Fake and enjoying the information. I recently heard a story that Senator Joni Ernst is trying to push a bill to save taxpayer money by changing the composition of our coins. She says it costs 2 cents to create a penny and 7 cents to create a nickel. I believe that, but I'm curious of your thoughts of changing what they are made of and how it relates to the overall fakeness of our money."
Well, that's a great question, and thank you for reading the book Fake. The purpose of Fake was not to give you answers, but for you to question everything that you see in your world today. Because from my point of view, is in 1971, when Nixon took the dollar off the gold standard and money became fake, then the rich were only going to get richer. So that today America has the largest wealth gap between rich and everybody else, the largest, bar of any other country in the world. And much of that is because of fake money. And then you look at education. Our school teachers teach us nothing about money. My poor dad was highly educated poor man. And then the Wall Street, they give you all this financial advice, but the only people that makes rich is Wall Street. You can talk to my friend John McGregor, we've done programs for Millennial Money on why the idea of investing for the long term in a well-diversified portfolio of stocks, bonds, mutual funds, and ETFs is not really a good idea for those who want to get rich. It's better than nothing, but not a very good idea. But the most important question is to ask that question. The biggest question is, what difference does it make if they can print money, what the cost of a dime or a nickel is? Any comments on that, Kim?
Well, I was in Estonia a couple of years ago, and they're pretty much a cashless society. They don't even have cash. So one of my questions is, how long are we even going to be using cash? Because everything is so electronic, credit cards. I asked for some cash in Estonia, and they're like, what? We don't have any cash here. I mean, it was really hard to find cash. So I'm just wondering how long it's even going to be around. Maybe that's bringing up the issue.
And that's what
society.
fake is about. Is there's three types of money. There's God's money, which is gold and silver. There's government money, which is the dollar, yuan, the peso, the euro, which is all fake. And then there is Bitcoin or cybercurrency. I call it people's money. And that's why I wrote fake, is not to give you any answers. I've never seen the world so in turmoil. Listen to what Mohamed El-Erian is saying. We are in this world of turmoil right now. And I like what he says. There's three things you need to have today. One is resiliency, optionality, and agility. I think those are the best answers you can get, because I don't know what's going to happen. And as Sir Isaac Newton says, I can predict the motion of heavenly bodies like the earth, the sun, the moon, but I cannot predict the madness of people. And I think people are going to go nuts. And in which way they go nuts, I don't know. Good luck.
And you know what Mohammed said, which I really, really liked, is he said that the future, you got to understand that the future is less predictable, so embrace it. And I see a lot of people, they're in such fear, they get paralyzed, and they just hunker down and do nothing. And he's saying, no, there's definitely things you can do, but you got to embrace and just accept that the world is less predictable than it was 10 years ago.
Everybody asked me about Bitcoin and cyber money, and I said, look, whatever you do, be a student of it. I really am not qualified to speak on Bitcoin. I mean, I have a little bit of Ethereum and all of this stuff, but it's just to learn about it, but hardly an expert at it. I have a friend who, I think he put $1 million in when Bitcoin was like 10 cents, and now he loves Bitcoin. So he became a multi-millionaire on Bitcoin. I think that train has left the station. If I told you right now Bitcoin was 10 cents, I hope you would just rip everything apart and put all your money in it. But the idea of 10-cent Bitcoin, I think, is gone forever. So things are changing that fast, and which is why what Mohammed says is resilience, optionality, and agility. And don't go chasing little butterflies all over the place, because I think that's what people are going to do. What's the next hot thing? And they're going to chase it versus study it. Just the other day, I went into an auction house, and I was looking around, and they're auctioning all these so-called rare and exotic things. And I walked out, and then 2 weeks later, somebody walked in there, and they found a painting worth $2 million. Well, it was right in front of me, too. I just didn't see it. Do you know what I mean? So am I going to go back into that same auction house and look for that $2 million painting? No, it's gone. This guy was really smart. Plus, there was a story of, the Masters tournament has a green jacket, and this person was shopping at a thrift shop, and they found a Masters tournament green jacket, a real one. He paid like $5 for it and sold it for $150,000. Now, does that mean you're going to hang out in thrift shops looking for a Masters? I wouldn't know a green jacket for the Masters, right, Kim?
I wouldn't know. No, I wouldn't know. and I'm a golfer.
And they can't figure out whose jacket it was because the name was cut out of it. Guy must have needed money pretty badly. So I think that's the message of this program. What Mohammed is saying is resilience, optionality, agility. Thank you for reading fake. But right now is start asking yourself questions and questioning everything you've been taught. Next question, Melissa.
Our next question comes from Oscar in Las Vegas. Favorite book, Unfair Advantage. He said, Robert, you and Kim speak on how doomsday is upon us. My concern is, how will our lives be affected if the U.S. goes bankrupt?
Well, that's a great question. The object is not that it's doomsday. The object is, can you be both an optimist and a pessimist? You see, I look at the worst case scenario, then I look at the best case scenario. That's why I was really happy to have Mohammed on, because I keep telling him he's the last standing optimist. But when I look at the stats of, like he says, the inverse yield curve and the bond market, stock market, the bubble, the printing of money, the socioeconomic instability of China, Russia, Iraq, I mean, you can't sit there and say, I know what's going to happen, because we don't know what's going to happen. And so, again, the three things that Mohammed says, resilience, optionality, and agility, be both a pessimist and an optimist. But I'm such a pessimist that Kim and I have figured out, we had to figure out how we could operate outside the banking system. In other words, if all the banks shut down, how would we survive? How would we make sure employees get paid? Because I'm not saying it's going to happen, but if the banks they have a run on the banks and the banks have to shut down, that's when you'll see hell. We'll be living hell. Any comments, Kim?
Well, the reason we have Rich Dad Radio is to educate and to see both sides, three sides of the coin, and the optimists and the pessimists. And I think Mohamed said it really well when he talked about what happens for a lot of people is a thing called political anger, where they just get angry and they make emotional decisions. I think that was one of the keys today to this show is that get educated and understand and learn so that you can make sophisticated or intelligent decisions, at least, that are going to basically benefit you instead of just acting purely out of emotion because you're pissed off at what the politics is doing and what the economy is doing. Go get yourself educated and think for yourself.
And that's what I would have to say is that, like when Kim Jong-un greeted President Trump to cross the DMZ, I'm going, who would ever have predicted that? And it drives a lot of these academic elites nuts. But as a businessman, I say that's a good move. I'd rather talk to the guy than shoot him.
Yeah. Yes.
Let's not push the button. Let's talk instead. I'll symbolically cross the DMZ. But everybody, no, we should shoot him. We should nuke him. I'm going, holy moly, you
Don't
guys.
talk to China. Don't talk to Russia. Don't talk to anybody.
And that is pervasive. I call it siloing. You just stay insulated to yourself. You don't talk to anybody outside of your little cloistered world, your point of view. I only hang out with people who like Trump. I only hang out with people who hate Trump. I mean, what kind of a civilization have we become? So that's why the Rich Dad said all coins have three sides, heads, tails, and the edge. I think this is a time for standing on the edge. So I thank you all for listening to Rich Dad Radio. Submit your questions to Ask Robert at richdadradio.com. And once again, thank you to Mohamed El-Erian, and thank you to all of you for listening to this program.